And time now for the Personal Finance Corner. Let's bring on board Dhirendra Kumar, CEO at Value Research. Dhirendra, hi, afternoon. Firstly, I want to ask you a very basic question today. Why should investors use mutual funds over investing in stocks directly?
There are two, three, we keep talking about mutual funds only, so looks like, of course, and we look like, mutual fund champions, but it is not, we are not making a point that investors necessarily must invest through mutual funds. If you can diversify yourself, if you can choose good stocks, and if you really have the time and inclination to analyze companies, by all means, which means that you can diversify, you have the capability, and you have the discipline, then by all means invest in stocks directly. But if you don't have the scale, with your 5,000 rupee, it might be very difficult. Which stock to buy, it might get difficult. So for those investors, mutual funds provide you instant diversification convenience. So investing in equity, if you can do it, by all means, if you invest yourself, and if you enjoy doing it and you have the understanding, then it will be cheaper too. So from that standpoint, I would always suggest that invest directly. But it is a very difficult thing to do on a small scale and with discipline.
But that doesn't necessarily mean that investing in mutual funds doesn't involve any homework. What sort of homework do you think should investors be doing as they look to invest in mutual funds?
Yes, every investor, the moment he thinks of, the moment you get out of the framework that you are saving and which is more than what you intend to consume, then this is a challenge. And a lot of investors don't, go about investing in a formal way. They just let the money lie in the bank account. But I would say that the moment you are able to save, you should decide that when are you likely to need the money. I think, individual investors have this great advantage that most of the important question which is needed to be answered before you invest is with the investor. So what is the time frame when you are likely to need the money? That is the first question. And if you decide that, okay, this money is something which you are unlikely to need it for many years, then keep it simple. And we keep suggesting to investors that, invest in a balanced fund. It will give you a very broad diversification. It will be tax efficient. If you are little venturesome, then consider a large and mid-cap fund or a multi-cap fund which will invest across all kind of companies, large, mid, small, all of it. Keep it simple. Don't buy into stories. And that is something which is valid even for stocks. When you are investing in stocks, don't get tempted by very attractive stories. Likewise for mutual fund, keep it simple. Your goal should be to diversify and invest regularly.
Okay, Dhirendra, good having you on the show.